AI just quietly flipped the switch on a new phase, and the people who don't understand what just changed are about to get run over by their own portfolios. If you own Nvidia, Palantir, Tesla, any AI stock, or honestly, any index fund that holds them, you need to know what's actually happening under the hood right now. This is the comment section with Thomas Paul. I'm not here to sell you a dream. I'm here to explain why AI-driven markets just got way more dangerous and, weirdly, way more predictable, if you know what to watch. Here's where things get interesting. Over the last few days, you basically got a live demo of how the modern market really works. On Tuesday and Wednesday, everything sold off. Sentiment was in the toilet. Suddenly, every genius on TV and X was yelling about valuations, rate fears, AI bubble, rotation to value, whatever. Then a day later, same companies, same earnings, same Fed, but prices bounced, and magically, the narrative flipped. Now it was, buy the dip. AI still early, market overreacted. Nothing fundamental changed. Only the story did. When I worked at a local newspaper in college, I watched editors rewrite the same economic data into two completely different headlines. Jobs surge or market fears overheat. Same numbers, totally different vibe. That's the stock market in 2026. The story follows the price, not the other way around. But it's even getting worse. Here's the part that matters for this new AI phase. In the old days, humans drove those mood swings. Now, a huge part of that intraday panic and euphoria is literally code. You've got AI models scraping headlines and social media in real time, algorithms trading off every Fed sentence, every earnings word, every macro hint, funds running AI-enhanced strategies that load into the same names at the same time, so when sentiment flips, it doesn't just drift, it slams. You saw it this week. A few red candles, fear headlines spike, models flag, risk off, and suddenly selling feeds more selling. Then the machines swing back to risk on just as fast. And here's where things take a step further. Most retail investors are still reacting like it's 2005. They see the move after it happens. Then they search, what just happened? Then they click a video, read a thread, and by the time they finish arguing in the comments, the algorithms have already traded the next 3 rotations. This is why people feel like they're always late, because they are. When I was 12, my parents lost most of their savings trusting a bank advisor who had a plan. It wasn't a scam. It was just blind trust in someone who didn't actually control the game. You're repeating that mistake if you think the experts or some AI model are steering this market for your benefit. But then he said this unbelievable thing. The big takeaway from this week is brutal but simple. In the short term, the stock market is not a weighing machine. It's a voting machine. And most of the votes are now cast by algorithms that don't care about your thesis, your time horizon, or your feelings. So here are the key points you need to understand from this emergency moment. First, short-term moves are almost pure sentiment plus leverage. If a few big funds decide to de-risk AI names for a couple of days, the models follow. Headlines turn negative. Retail panic sells. Then, when the same funds decide they're done, AI miraculously recovers and everyone acts shocked it bounced. Second, fundamentals still matter, just on a boring timeline. Earnings, cash flow, real AI adoption, those decide where Nvidia, Palantir, Tesla end up over years, not days. But in the meantime, the path there is increasingly unhinged. And third, this is not a once-in-a-lifetime AI window you must FOMO into at any price. Anytime I hear, this is the last chance, I remember my early 30s. Everyone around me chased flashy stuff. I bought something boring and unfashionable. It didn't 10x overnight, but it worked, slowly, while the hype trades blew up. The same pattern is showing up in AI now. Here's where things get interesting. So what does this new AI market phase actually mean for you? Let's break it into 3 things to watch: policy, plumbing, and patience. Policy first. When governments talk about AI, most people hear jobs or safety. Markets hear, is this going to change liquidity, regulation, or taxes? If regulators start talking about restricting high-frequency trading or slowing down AI in finance, that hits the algorithms directly. If politicians push for AI infrastructure spending or huge cloud incentives, that can funnel money into the same mega-cap names everyone already owns. So when you see AI in a policy headline, ask, does this change how money flows? Not, do I like this speech? But it's even getting worse. Second, plumbing. The more AI runs markets, the more we depend on fragile systems. Order books fill and empty faster. Correlations between unrelated assets spike because the same models own them. A glitch in one data feed can ripple through multiple funds at the same time. We already had flash crashes without AI this powerful. Now imagine faster code, more leverage, and everyone chasing the same narrative. No, that doesn't mean sell everything and hide in cash. It means stop assuming the market will move in smooth, rational lines. You can have days where nothing fundamental changes, but your portfolio swings 5 to 10% because the underlying plumbing got stressed. And here's where things take a step further. Third, patience. In an AI-driven market, the edge for normal people is not speed. You will not outtrade the bots. They live on microseconds. You live on whatever speed your Wi-Fi decides today. Your edge is time frame. If your plan for AI is, I'll just chase what's up 20% this week, you're volunteering to be exit liquidity for someone's model. If your plan is, own a small, sane slice of AI exposure you understand, accept violent swings, and focus on the 5 to 10-year trend, suddenly all this noise becomes mildly annoying background radiation. Around 48, I stopped trying to sound impressive and started caring about being precise. Most people don't need another hot take. They need one clear sentence. You don't beat AI markets by being faster. You beat them by refusing to play their time frame. But then the unbelievable thing happened. Now tie this back to you, sitting there, probably watching this on a device powered by half the companies we just mentioned. Your job is not to predict tomorrow's candle. Your job is to survive the next cycle. So, what can you actually do? 1. Decide your AI exposure on purpose, not vibes, not FOMO. Percentage of portfolio, written down, that you're okay seeing drop 50% on the screen without losing sleep. 2. Watch policy signals like their earnings, elections, AI regulation, antitrust cases against big tech. These don't just move headlines. They can change which models get to operate and how much leverage they can use. 3. Separate story from structure. Every time you hear AI is dead or AI is unstoppable, ask, is this a structural change, rules, rates, regulation, or just a story laid on top of price action? Here's where things get interesting. Quick side note, because a lot of you ask how this channel even runs. This video was created with budge.io, the same system that powers this entire channel. If you're watching this and thinking, I'd love to run a YouTube channel like this, but I don't want to be on camera, this is exactly for you. Budge researches, creates, and posts YouTube videos for you, fully automated. But you're always in control. It finds trending topics in your niche, writes a high-quality script, creates the thumbnail, combines everything with an AI avatar, and uploads to YouTube. You review, give feedback, and over time, it learns your style. As you can tell from this video, this isn't low-effort AI spam. The content is actually watchable. If you want to start a channel without burning out or staring into a ring light, check out budge.io. Link is in the description. But then he said this unbelievable thing. Let's land this. AI just pushed the market into a phase where headlines chase prices, algorithms chase headlines, and humans chase whatever's left. You can either be the last one in that chain, or you can step back and say, okay, I can't control the intraday chaos, but I can control my risk, my time horizon, and what I actually own. None of this is financial advice. I'm some guy on the internet who watched his parents get wrecked by experts, got laid off in a strategic realignment, and learned the hard way that patience usually beats panic. Use this as education, then do your own research, or talk to a licensed professional who actually knows your situation. Now I want to hear from you. Do you think AI is making markets smarter, dumber, or just faster at being emotional? Drop your take in the comments. If you got value out of this, Hit subscribe for more breakdowns like this, and share this with one friend who's currently panic checking their AI stocks every 5 minutes. This is the comment section with Thomas Paul. See you in the next one.